Aloha, everyone. Thank you for joining me. This is for the week of September 18th, 2023, and it is Sunday the 17th. Got a few things I want to go over, not just for the markets week ahead, but a short explanation on central banks and what they're headed towards so we can understand a little bit more of the bigger picture. I am a macro person, and I would like, especially if you're new, maybe this will be new to you to see what's going on with these central banks. So let's get into it. First, for the markets this week, our big headliner is the Fed. They're speaking on Wednesday. They're making their interest rate decision, and then they'll have their press conference as normal right after. We are getting a few other numbers Monday and Tuesday, looking more towards the United Auto Workers strike. If they make a deal with that, could have a little bit of volatility with the markets. Overall, September and October are typically very volatile and historically difficult months for equities. So they are facing some headwinds and kind of showing a bit of weakness. So we'll see how that affects this one going forward. So we've got more PMI numbers the end of the week. But as I said, the large thing is still the Fed chair decision on Wednesday. So with that, I would like to go into a little bit of the central banks behind all of this and the central bank control plan. In one word, is crisis. They are pushing towards a crisis. It's what they need. And the whole point of this is that you cannot change a society economically and socially unless there is a crisis because they will be unwilling otherwise. And so what I look to for uh, basically guidelines, I look back to history and I try to stay on board with that so that we don't repeat the same mistakes. And I didn't have far to look because the Bank of Japan is very key with what is going on right now, and it's rhyming an awful lot with what we've got going on now. So, with that, the crisis that we're expecting is going to come from this bond market. Basically, the debt. The debt bubble is insane. It is so huge. It eclipses the stock market by many times over. So I've got a few stories here as far as kind of the boiling frog that the world is adapting to the Fed's rate hikes. And now that shunt loans, basically high risk loans, are now a market darling for the credit. So, as we know, they need to make loans in order to increase the debt so that they can continue to inflate. It's the only way to keep this system propped up. So we got a warning from Ilarion, a warning of a massive corporate refinancing next year. So this is really the large one I wanted to bring up because all of the companies are kind of barely holding on, waiting for their numbers to increase and seeing who's going to get axed first. So basically it's kind of a blood run like Thunderdome right now between corporates and seeing who's going to survive. And the central banks have a lot to do with this and as far as who is going to survive. So basically what they do is through the cost of money, which is their interest rates and how much they're loaning out, they also have guidance to the commercial banks. So the Federal Reserve and the larger banks tell commercial banks how much they are to lend, and they'll force them to lend certain amounts. And they also tell them which sectors they need to lend to. So they get to choose whether projects go forward or not. If it's larger corporate projects, if it is aerospace engineering or war, which is also very bullish for the stock market. So we've got a lot of these things in play. So essentially, by choosing who they can lend to, what sectors they're going to lend to, they are really controlling a good portion of this. And their whole goal is, remember, crisis. They must inflate. So when they talk about raising interest rates, they're not fighting inflation. They're crushing demand in the consumers. They're throwing more people into that pool where people are drowning because smaller people cannot afford uh, their daily uh, their daily expenses, food. CPI is picking up, which is core price inflation. So as these things get more expensive, people will cry out for help and the government will be happy to oblige. So kind of it instills that control. So we've got another story, and it's guided towards financial errors on a smaller end, but financial literacy is an epidemic among Americans. This also is by design. So the Department of Education, the education across America is for the most part government controlled, government run. And on purpose, they guide with core, they call it core curriculum. But no one is taught how central banks work. No one is taught really financial literacy on a higher level. No one understands how money, even what money really is, or how money works. So again, that's by design. They don't want any revolts, and they just want people to kind of go on and head into the direction that they are guiding them all. So we've got another story about the credit card charge-offs. We know that unsecured debt is another huge bubble that is about to wave over. However, this ties into another story because they own the credit cards, but now they're looking to offer payroll services. So if you get paid through them, they can kind of take their payments first and leave you whatever is left after. So, a couple of other stories here. This is regarding the strike. Why Stellantis could face a longer strike than Ford or GM. So, these things are not equivalent. They're not across the board. They're picking and choosing which corporations they want to make it, by which ones get loans. And then what they do on top of this is they take their top people that they want and instill them as the CEOs of these corporations that they are building up. Think of BlackRock. BlackRock is now buying up pennies on the dollar all of the defaulting loans, whether it's homeowner loans or corporate loans. And as El Arian says, it's only settled to increase over this next year. So another story I want to go over, they're sinking the consumer on purpose. So let's take, for instance, homeowners. So now with the between the floods and everything else going on, they're ditching home insurance because the premiums are not just rising, but they're getting ridiculous. So if you're a homeowner with a loan on your home, you have no choice but to pay these insurance premiums. And who are the insurance companies owned by? These larger corporations, BlackRock and others. And so BlackRock has purchased a lot of these smaller homes, residential homes. They don't have to pay insurance premiums if they don't want to because they paid cash. Not only that, they own the larger portion of these insurance companies. So they're making money from the homeowners on one way and sinking them the other. So this is a very uneven thing going on, and this is all by design. So while there are zombie corporations that should be out of business or absorbed, this is kind of going over the top into where they are controlling which companies will pull out of this. And the smaller, medium-sized businesses are pretty much done. So on the flip side of this, the same thing is happening with banks. So the larger banks have all of the best loans. All of the best loans are the ones that will pay, and they are the low risk. They package together all of the high risk loans with the asset back that they are looking at going under. They give them all to these smaller banks. Once the banks go bankrupt, they merge with them, buy those assets for pennies on the dollar, and they make those assets good again. That's how they're working. So I expect we're going to have many more bank failures between the medium, maybe even a larger bank, between the interest rates that will continue, and the smaller banks will, for the most part, be done. So we'll see more inflation going forward. With that, got a story on oil and energy. They're saying the world is struggling to make enough diesel. We're going to continue forward with oil, and this is inflationary. So oil right now is hitting a resistance level. So my personal expectation is that it will pull back. However, it's going to increase after that. It's going to kind of consolidate, set the price where it's at so that it becomes normal, and then continue higher because we've still got restrictions on supplies. So there is a point in time where I expect it to drop a lot farther, but I don't think it's yet. We'll see what happens. So that also is highly inflationary. I've gone over that before as well. Okay, and my last story is the week that started with the World Trade Order warning ended with the trade battle. So This is kind of how they're moving this time globally. When you need to wash your country's currency and kind of trade, do clear over, pardon me, what you've been doing with the currency, you do it through trade imbalances. So this is how they're going to kind of cover this over until they get the crisis they need and the people shout out for them to step in. So I'm going to leave this at here. It's going on awfully long, which is not what I like to do. If you have any questions about this on the central banks, hopefully I was kind of clear. This is a very scant summary overline of how they're working. I may go over this in more detail in a separate one if it seems like there's enough questions regarding this. Do you have any comments on this? I know some of you know quite a bit more about this than I do. Please help the others and put those in the comments as well. If there's anything you liked, hit that like button. And for now, I'd like to let you go. I've got a couple of lava updates, but I'm going to skip those for now because I've got to let you go. So with that, my friends, we've got each other. We can stay outside the central banks by buying gold and silver, tradable amounts, smaller denominations. Imagine if you're going to fly to a different country and the dollar would be worthless. What would you trade to get the currency or the food items that you would need? Those are the things that you want to consider stocking up on, and we can trade with each other. So until I see you again, my friends, stay free.